Exciting.
We're going to see it tomorrow.
Oh, of course.
After years of saving and months of stress, first-time buyers Charlotte and Jamie almost have a place to call their own.
It's been a little while. Obviously, we keep looking at it online.
They're exchanging contracts on a home in Leamington Spa after seeing their first choice purchase collapse and what they can afford squeezed by rising interest rates.
At the start, we probably could have afforded in January a bit more of an expensive house. But as June rolled around, we were starting to think, do you know what, looking at the monthly repayments, that as well as our bills, etc., that's not going to work anymore.
And then also alongside that, there wasn't as much houses to choose from because it seemed like there was a bit of a slowing down in houses going on the market.
Charlotte and Jamie defied a slowing property market in which prices are falling and the number of transactions slowing. Though in affluent Leamington, agents say the market is holding up.
People are wanting those bigger bedrooms, they're wanting the garages, the gardens and the space around their houses, or they're wanting to downsize. We're not losing that want.
House prices rose after the first COVID lockdown in 2020, peaking in August 2022. But as interest rate rises, which began in December 2021, started to take effect, house prices have fallen 5.3% in a year, knocking £15,000 off the average home price. To make sales happen, sellers may need to take a hit. Matthew is moving north from a new development outside Leamington, but only after agreeing a lower price than he was offered at the start of the year.
We've had to accept an offer of £15,000 lower than what we'd originally accepted. Fortunately, though, we've been able to renegotiate that with our developer for the next house, and they've also been able to bring their price down.
Britain has a chronic housing shortage and rents are still rising, but building a more balanced market will take time. Falling house prices reflect the new economic reality. Rising interest rates have pushed up the cost of borrowing on top of a cost of living squeeze, giving buyers and sellers pause. And with rates likely to remain high into next year, prices will probably fall further. But in the housing market, everything is relative. At £260,000, the average house price is still 8 times the average salary. For many people, the first rung on the housing ladder remains well out of reach. Paul Kelso, Sky News in Leamington Spa.
Now, staying with the economy, and the UK's failure to recover to where it was before COVID-19 has been a constant concern for more than a year. It turns out, though, that the narrative we've been using was wrong. Now, rather than remain below its pre-pandemic level at the end of 2021, revised data from the Office for National Statistics shows the economy had a stronger recovery from the initial lockdowns and was actually larger by that point. The figures also showed that gross domestic product, GDP, contracted by 10.4% in 2020. It was previously reported that it shrank by 11%. And in 2021, GDP grew by 8.7%, considerably more than the 7.6% previously reported. Our business presenter, Ian King, has more on the significance of this update.
This is really quite a dramatic upgrade from the Office for National Statistics. It covers both 2020, which is obviously the peak year for the pandemic,